This video is not about Bitcoin, but Bitcoin is the leading indicator within the crypto market. And Bitcoin, you can see, is holding its 200 daily moving average. We're going to know by the end of today whether that's going to hold, and that's going to be an important metric to know whether we're going to create those higher highs or whether we're going to get another turn to the downside. So you can see the crypto bubbles over the past week. We've had some big drops. Dog with hat down 35%. The crypto market's ranging between 10 to 25% to the downside during last week. And look what's happened. We've jumped straight into fear. So does this create opportunities, or does this mean it's the end of the crypto market? We've got opportunities built into our portfolio. Which one's going to get added? Let's dive in. This one's going to be a bit more of a longer video, guys. We're going to go through Bitcoin. We're going to go through all of our portfolio picks. We're going to look at what opportunities are going to arise. And I've got one pick for the day, and I'm going to show you why I'm entering this into the portfolio and why this is going to strengthen the portfolio. So first and foremost, we talk about Bitcoin as the leading indicator. You can see that Bitcoin over the past week has dropped 10%. What happens when Bitcoin drops 10%? Altcoins get absolutely slammed. So what's going to happen here? If we hold the 200 daily moving average, you'll expect a pump, short-term reversal bounce in altcoins. That could give opportunities for the portfolio. However, if Bitcoin drops this, if it drops the 200 daily moving average, the next support, you're going all the way down here, 13% to the downside. What happens when Bitcoin drops 13%? Bam, altcoins get slammed. Bitcoin drops 30%, the altcoins will drop 30%. Now, it'll make your portfolio look bad in the short term, but that creates opportunities. You get chances to average down, you get chances to hit those buy zones where there weren't previously buy zones for those other altcoins, and then you position yourself better for the next bull run. Remember, guys, we're buying materials and we're building a house. We're building the portfolio, that's our house, and what we're going to do during the bull run is we're going to swap those low cap materials for better materials. You're going to swap your bricks for steel, and your steel is going to be your Bitcoin, your Ethereum, your Solana, your lower risk cryptocurrencies. You want to be towards the end phase of the crypto bull run to be in low risk assets, because, like we said, when Bitcoin drops 13%, altcoins drop 30%. And towards the end of the bull run, we want to be doing the 13% and not the 30%. And we want to be in cash as well. So that's the plan with the portfolio. So it's important that we're building down and building down and building down. Because if the crypto market reversed now and started building up and building up, what we're doing is we're bringing our price up. Our entries are getting worse as the bull run progresses. We want our entries to average down and get better to have the best possible chance of hitting it in the bull run. So that was Bitcoin. The next thing that I'd like to look at is the strength of the dollar. Why is this important? Because we go through the business cycles, we go through times of quantitative tightening, we go through times of quantitative easing. And this goes through the business cycle, and it plays out again and again and again. And it always coincidentally happens when the presidential election is about to be announced. When the new president comes in, they stimulate the economy. They need to make themselves look good. They've promised the world for people to vote for them. So stimulating the economy is part of that. They need the economy to look good for the first couple of years of their presidency. So strength of the dollar, that's what I'm getting at. Strength of the dollar is important. And the DXY measures the strength of the dollar. The DXY is the dollar against a bag of fiat currencies, predominantly the euro. It's got the Great British Pound, the Japanese yen, and it's got another Canadian dollar. It's got another bag of currencies. So they're all together against the dollar. And when the dollar's strong, that means the economy is weak. When the dollar's weak, that means the economy is strong. So we want to see this. We want to see a weak dollar. And you can see we've dropped through this support line on the Dixie, and we want downside on the dollar. So this is looking good. That's giving me a leading indicator that the dollar is weakening. It's dropped this line of support and it's going to the downside. We've got the next major support here sitting at 101,210. We've got a small support here sitting at 102,769. So we can monitor the Dixie. Right, before we do that, or after we do that, we've got our portfolio. So what we're going to do is we're going to look at the current performance of there. We're going to zoom out onto the weekly, get the macro picture, and you can see that we're nearly hitting a couple of buy zones. We've bought here, and we're nearly hitting this point where we can enter 50% or an extra $50 into the portfolio at 50 cents. So I'm waiting for that to happen. If it comes back down and hits 50 cents, I'm adding $50. Got take profits up here. We've got $2.05 still. We need this bounce. Once we take the $2.05, that's huge profit. We can retake our capital plus an extra amount of dollars, and we can reapply that elsewhere with other cryptocurrencies that are at lower levels. Once something's bounced, you want to be taking the profits from the thing that's bounced, or some of the profits, putting it back into something that hasn't bounced, wait for that to bounce, rinse and repeat, rinse and repeat, rinse and repeat. This is going to be the best possible way of being successful in the bull run. Having a strategy, having composure, and knowing exactly what you're doing. Because I'll tell you something, when this happens, you come up here and you're hovering up here, you're not going to want to sell anything. You're not going to want to sell because the market's going to be hyped, the news is going to be good, your friends are going to be buying, your nan's going to be buying, everyone's going to be buying, and you're going to be thinking, should I be selling here? Should I be selling here? When you get a pullback, if you haven't sold 50% here, that means you've lost all this as an opportunity. All this is an opportunity. For an example, 30% to the downside where you could have capitalized on that and then re-entered at lower levels. So that's the importance of the strategy, and that's the importance of knowing exactly what your exit points are. It doesn't have to be the full amount, 50%. If this happened, bam, straight through, support, bam, you've got 50% riding, but you've still got your capital to put elsewhere. So that's important that we do that and we keep a structure. You don't have to pick these altcoins, pick your own altcoins, but know exactly what your entry level is, where you can average down if needed, and where your take profit is, and how much your take profit is. So Arbitrum's not ready. Once we get to 50 cents, I'm more interested. We've got Beam here next. See, Beam, we had the break, come back, we've had the retest. Beam's at 32 cents. When Beam hits, at 0.032 cents. When Beam hits 0.025 cents, I'm interested, $50 average down. We've got Scallop. Scallop looked like it was going to break, and then it fell back through. It's fallen through its support. Where am I interested in Scallop? It's at 15 cents at the moment. We've nearly got some extra buy entries here, and not quite. If we can get them cheaper, we should be getting them cheaper. You're haggling for these materials for your house, and you're going to end up with more capital by doing that. Be greedy with your entries. Right, okay, so we're waiting for that to come down. Once we hit that, it's likely to hit a support of 10 cents, and then hopefully you get a bounce and a break. So that's potentially ready. It's nearly ready. We've got AVAX next. Our load 50% levels all the way down here, $8.74. AVAX is not nearly ready yet. It's broke and it's holding support. So AVAX was the one for last week. That's down a little bit, but it's not ready yet for the second entry. If we just bought now, $100, it's going to be around about our entry price. We want this to come down. And if it doesn't come down and it holds, we've still got our $50 in there. It doesn't matter. You put the rest in elsewhere, guys. You need to put it in. You need to put the rest in, or your capital, where you're going to get the most profits and know exactly where your exit plan is. Right, okay, Proppy. We had Proppy. Proppy's come back down. We've had the break. We've come back down. We've had the retest. We haven't broke support yet to the downside. We're still holding. And it's all the way down here at 47 cents before I'm interested in averaging down and adding another $50 into that. So Matic was the one last week. Exactly the same. You've had the break, you come back down, you retest, haven't broke the low yet. Matic, what did we say? 50 cents on Matic. Matic looks like it's ready. We're at 50 cents at the moment, guys. That's potentially one that's going to be added today, Matic. Let's see if there's anything better, any better opportunities. I don't know which one I'm adding yet, guys. I'm going through here and I'm analysing this in real time before I decide which has got the best potential for the most capital. So Matic's looking good. Shiba Inu. I want Shiba Inu to come all the way back down into this range before I load it to 50 cents. It's currently holding support. It's just dropping its 20 weekly moving average. So by the end of this week, by Sunday close, we want this to be above the 20 moving average. Otherwise, you can expect more of a downside and you've got more of a potential to come back down and hit this load 50% level. Gala Games next. Gala Games. Right, okay. Gala Games, my load point is going to be 12 cents. It's currently trading at 19 cents. It's going to be 0.012 cents. It's currently trading at 0.019 cents. So we've got a drop before I'm interested here of, doesn't look much, but it's 47% to the downside. It's pointless buying that now. If we can drop 47% to the downside, there's a high probability that we're going to go back down, test this low of this range that we're in the accumulation phase for. 798 days. So you'd expect that to hold. You'd expect that to hold. Opportunity comes down, like I say, when you get to the 0.012. So that's not quite ready yet. Got theta next. I just get this a bit clearer. Got theta next. We said there was two things that were going to happen on theta last week. We were creating an inverse head and shoulders. We were either going to drop to the downside, or we were going to break and start putting those higher highs and higher lows in. Look, it was the drop that we had. It was the drop that we had. I've got 57 cents. What I'm doing on these guys is I'm putting in limit orders. If we get a nasty wick to the downside and a quick buy up, you're not going to be at the charts at that time. So I'm putting limit orders in for this amount. I've got 57 cents. If I get $50 at 57 cents, that brings my average down on theta. Got GRT next. Same. We were expecting the break. We'd had the inverse head and shoulders. We said if we broke the neckline and we broke a trend, you start seeing those highs. We didn't break the neckline. We didn't break the trend. In fact, we've come back down and we've tested the previous low. I've got my low 50% level here, sitting at 5 cents. Current price action's at 16 cents, so that's quite a bit to the downside. It doesn't look much on the weekly. 63% to the downside. So buying it now, potentially you could get it 63% cheaper next week or the week after. Are you going to risk that? Greedy with your entries. We're buying these materials cheap. We're going to have a good house at the end of it. Right, injector protocol. I do like injector. I do like injector because this previous high, which acted as resistance, as strong resistance on this week, and created these wicks here, that is showing selling pressure. We've broke through with velocity, we've come back down, and what's this showing? That's showing the opposite. That's showing buying pressure. So we've flipped from resistance, we've hit support, and now we're holding support. So that one looks quite good to me. Is there any better entries elsewhere? Problem is with injector now, if we drop this level here, we've got downside potential, 91% to the downside, guys. That's nearly all your capital. You put $1,000 in there and you drop 91%, that means you've got $90 left. Right, okay, A0. See this one, guys, this one's good for me. We've come back down from this long range. We were in this accumulation phase. We're in this accumulation phase for 495 days. When you're in an accumulation phase for that long and you're breaking the highs, or you're not breaking the highs, you're resisting from the highs and you're using support on the lows, once it stays in that range is going to hold as strong support going forward. Now what we've done is we've dropped this base, we've come back down and we've tested support. And if we just jump into the daily, this is what interests me on LF0, jump into the daily. Look what we've had here. We've had a reaction at this level. We've had a big buy-up candle. We've nearly had a trend break. The following day, we did get a trend break. We had the red candle as a reverse. We're holding this area as support. I think this could be the one, guys. This could be the one. Right, okay, here's one more that's interested me. Right, Flux is looking quite good. We've got a little bit of a divergence there. We've got a higher high here. It's a slight higher high there. I'd be waiting for the trend break on Flux. This was a request in one of the comments. Keep commenting. I'll keep adding them to the charts. You want a trend break on this, additional confirmation. The problem is you've got the 200 daily moving average above you. That will act as resistance. So once you've got a break, bam, 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 hopefully you'll get something like that. That'll create an inverse head and shoulders as well. That'll give it more of a pump. Left shoulder, head, right shoulder, bam. Got Celestia next, waiting for the break on Celestia. That's going to be a good one. Once you've got the break, once you've got the confirmation that the bulls have got control, that is going to be a good one. Now, this is the one that I'm interested in. It's going to be a toss-up between injector and this. Exactly the same things happened. Resistance, resistance, strong resistance. What happens? You break through, it's come back down, support. So you've got this, resistance. You've got this, resistance. Come back down, what happens? Bam. Support. Time and time again, what was resistance becomes support. That's holding support and it's come back down. It's hit once, it's come back down, hit twice, it's come back down, hit 3 times, and it's holding this range at the moment. So there's either 2 ways you can play this. Wait for the break with additional confirmation. You can wait for the retest, or you can put an accumulation in there now, expecting that if you're wrong and this goes to the downside, You've got a chance to average your position down, which will enter around about the 62-cent level if this was the low. So it gives you options. It's always giving you options. And I think that I like fetch. What I'm going to do, actually, we've got PayPay. We looked at PayPay. This is quite interesting, guys, because what was I saying about PayPay? It was up here. We were in an ascending wedge. What happens with ascending wedges? It's a bearish pattern. Once you break to the downside, with some velocity. Where do you come back and test? The 618. Look at this. I drew this, guys. There's the flag. Drop to the downside. Come back down. Look where it's holding. The 618. It's the 618. To be honest with you, I'm interested in this one as well. I am interested in this one. The problem is, if Bitcoin drops and we come back down even to the 786, that's a 33% drop to the downside. So am I prepared for a 33% drop to the downside on this meme coin? If this comes back down and holds the 786, I'm interested as an entry, but I'm not interested in an entry at the 618 until I know that Bitcoin's held the 200 daily moving average. Bitcoin holding the 200 daily moving average is going to give us a lot more options, I promise you that. Okay, last thing we know, it's going to be fetch, guys. It's going to be fetch. And I'm going to look at the fetch BTC chart, because remember, we're looking at Bitcoin as the leading indicator. How is it performing against Bitcoin? You can see it looks pretty identical. We've got this downtrend here. And I'll just get the fetch chart up itself. This is the fetch USDT. This is the fetch Bitcoin. It's looking very similar, and we're waiting for a break, and we're holding support. We're holding this support line here. So although it hasn't broken, I'm going to dip my toe in the water here, guys. When you're looking at this, when you're looking at that, 1, 2, 3 touches of support. If it goes to the downside, I'm prepared to average down, but I'm happy taking this now. $1.07. Fetch is getting added to the portfolio. Let's have a look at the portfolio now. I haven't added fetch on here now, but this is what it's looking like, guys. So if you're going to use a portfolio, get yourself on CoinGecko. This is completely free to use. It doesn't cost you anything. All you do is add in your new portfolio, and then you add in your coins, and then you add a transaction each time. So I'll be going on here as an example. I'll be going on here and I'll be adding a coin. So I'll be adding a coin onto here, and then what you do is you add a transaction. You'll add the transaction on there, and it's going to show you in real time how that portfolio is performing against anything else in the portfolio, whether it's up or down, what your P&L is, where you're doing good, where you're doing bad, and it can help you understand which ones have dropped the most, because that gives you the indication to look at the chart, find out how far it's dropped, and that gives you the opportunity to average down, position yourself for the next bull run. Right, okay, that was a long one, guys. If you did enjoy this, let me know in the comments what you want me to cover next. I can't cover all of the cryptocurrencies. I don't know all the cryptocurrencies. You need to tell me what you're looking at, and we're going to get some gems together. So take care of yourself, and goodbye from me.